Okay, problem 12.6a. And with this problem, we bid a fond adieu to cash flows. I'm sure you're going to miss them terribly. But let me go make sure you know where to get all the numbers from. The net income number comes from the income statement, okay? So net income, $136,000. That comes from the income statement. Then the cash numbers from the balance sheet, 107 and 164. 107 is our beginning cash, 164 is our ending cash. Put that up where you can see it so you know where they came from. So they came from the balance sheet. And we know the difference. We know the net increase in cash is going to be $54,000. We know that. Or $57,000. 164 minus 107. So when we're all done, we're going to have a net increase in cash of $57,000. We just have to figure out where that came from. And from that, we're going to look at the income statement and the balance sheet to get the numbers that we need. And this problem is far less extensive than 3A, which you had just completed, or ostensibly just completed. Okay, so let's take a look. The first thing we're going to grab is depreciation. I always grab depreciation expense first. It's the easy apple, because you always know you're going to add back depreciation. Always. So I'm going to add depreciation of $54,000. There are no gains or losses. I don't have to worry about that in this problem. The rest of these are all in balance sheet numbers. So my accounts receivable increased from 71 to 83,000. So if my accounts receivable went up, my cash went down because I took credit for those sales here but didn't collect the cash for them. So I'll try to remember to use red for decrease and green for increase. I'm betting I screw it up by the third time I get to do it. Now let's take a look. Our inventory went up, so our cash had to go down. Again, unless you go steal your inventory, at which point we don't do accounting for that. And our inventory was 526, it is now 601, so our inventory has gone up 75,000. Our cash has gone down 75,000. Increase in accounts payable. In other words, we now owe $16,000 more debt than we did owe. We took credit for those expenses there. We haven't paid them yet, so our cash increases by that amount. And our taxes payable have gone up by $3,000. They were 25, they're now 28. So our cash went up because we certainly took the tax expense there, we just haven't paid it. That totals 122. That's a check number from the book. And we got that number by summing these numbers and combining with this number to give us the check number. Okay, cash paid for equipment is pretty easy. We paid $36,000. No notes. Flat out paid $36,000. Pretty straightforward. We sold some stock. We sold 12,000 shares of stock, $5 a share, $60,000. Clearly this company is no Apple. Their stock is selling for $5 a share. We paid dividends of $89,000. And while you could say that it seems odd that a company would pay all those dividends, company dividend policy is as unique as the company. Every company has their own dividend policy. Philadelphia company called Pep Boys, some of you may be familiar with it. They've declared a dividend every year since World War II. Let me move this up so you can actually see the numbers I'm talking about. There's the cash from the issuing stock. 12,000 shares of $5 a share. And there's the dividend of $89,000. So the total cash from financing is $29,000 out. And like I was saying, this Philadelphia company, Pep Boys, has paid a dividend every year since World War II. 1 year in the not too distant past, they paid a dividend of 1/10 cent per share. Companies have odd dividend policies. It's just the nature of the business. So if we take 122, subtract 36 and 29, we get a total increase in cash of $57,000. Praise the Lord, another miracle. And that explains our change in our cash picture. That's all there is for 12.6a and for cash flows.